That shit's slightly annoying. Alright, that's better. Whoa. Right, so October, right? Starting it off, took a loss on Euro USD. It looked so crisp. They were coming along nicely. And I took it on Friday. I knew it was a higher risk to take on a Friday. There was a little bit of FOMO where I was like, I'm just going to take it now. Because if the market moves, instead of me waiting for Monday, at least I can catch a little bit. You know, there was some wear and tear from not taking trades for 5 weeks and then being ill from the Wednesday, being in bed all day, feeling like shit Thursday, feeling like shit waking up Friday. Waking up Friday knowing I was going into work as well. But we took a loss. I'll show the loss right now. It was this market, this trade. I was simply looking at a break, a little quick retest for the market to continue pushing to the downside. You know, we had the beautiful engulfing evening star underneath this area, beautiful little pullback. Lovely pullback on the 1 hour also, engulfing. I was anticipating for London session to kick in the momentum we wanted to see. You know, all the time frames were bearish, retesting the EMA. It was a nice setup, man. It was a nice setup. It just wasn't meant to be too. But this week's approach, right? This week's approach is there's more going on now. There's more going on in these markets. Am I discouraged from it? No. I literally thought to myself, if I wasn't trading a funded account, I wouldn't care. If I was trading my personal account, I'd be like, yeah, I'll take the loss on that. I'll just place trades because I know the standard of trade that I hold myself to. And I will take those trades, and I know those trades will make me money over time. But when you have the funded account and you're risking percentages to pass that shit quick, that's where it can kind of get a little bit tacky. But we have two categories this week. We have the trades, as usual, following the strategy. And then we have the trades that are not following my trading plan. They all follow the strategy. It's just these trades follow my trading plan. These trades, potential trades, do not. So, AUDJPY, right? See, I've calculated this shit already. Potential push to the upside, right? Retested previous structure with a wick. The daily is bullish, never went bearish. We've had a morning star retesting this strong support. If you go left, resistance, support. Beautiful on the daily, right? Strong level. Now, on the 4 hour is where it comes very nice. So we had a daily engulfing candle with a 4 hour shift of structure, creating a left head, right shoulder, creating that shift right here. Now all we're anticipating is for price to have a quick pullback into this resistance support. resistance support. If I take this even further left, you'll see that it's wick resistance. Just keep scrolling. Here we go. Resistance, support, resistance. We're going to go any further. Back in 2016 right now. Fucking hell, we went far. Resistance, support. You see how this level is respected, right? We go down time frames. Boom. Left head, right shoulder, break, retesting the neckline. We're above structure. Bullish structure. Bullish structure. Bullish structure. All the way down to the 15-minute, we're bullish. This is beautiful, crisp price action. Now we see this double bottom. EMA, 15-minute. If we create potentially that wick pullback, shift the market bearish to create somewhat structure like this on the 15-minute to give us our higher time frame EMA rejection engulfing candlesticks. I'll then be looking to enter that to the upside. The next market is USD/JPY. USD/JPY, we are looking for a sell position. Market is clearly already bearish. And we've been pulling back super slow. Now we've closed below the EMA. Now, when I see that on the weekly, that adds to my lower time frames, because when they create lower highs, I understand that those lower highs are created around the resistance of the weekly EMA. Daily lower high will be that wick rejection to the EMA. Happens to be also previous structure, daily EMA, daily area of interest. If price pulls up just a little bit higher into this level, we get a psychological level rejection. The 4-hour, you can see if I mark this psychological level. Psychological level being rejected up here. 4-hour, never shifted structure, right? This is still bearish, which I love, because we're going to wait now for the 1-hour and the 2-hour to give us the push to here, reject, shift of structure, give us the confirmation that the 4-hour intends on continuing to the downside again, to either reject these lows or continue to break through them. And then that added pressure that the market needs to continue to break through those 4-hour lows can then come from the daily EMA, lower high, the weekly engulfing EMA, area of interest, all those things to help it push. But I'll be looking for sells to these bottoms, because you can clearly see strong support. If we come down here again, I'm not trying to gamble, be that type of guy that's selling all the way down here when there's strong support here. Next pair, GJ. GJ is pretty much the same concept, just not as clean. Engulf, we are not bearish. Daily lower high, EMA, previous structure, psychological level, 199, right there. 4-hour, we're going to be waiting for a 4-hour shift of structure, bearish, and a daily engulfing. this setup's not the best. I just have it on here because it's similar to UJ, and it could potentially be cleaner. But as of now, UJ looks much better. You know, like, look at that shit. Yeah, it's in this consolidation, and you might think, why? Why would you trade the consolidation? Shouldn't you avoid doing that? Yeah, but the markets recently have not been playing by the rules, by my rules, anyways, and how I see the market and how, in good conditions, trending conditions, the market operates smooth off of just trends, higher highs, higher lows, shift of structures, creates higher highs, creates the higher low. Like it just follows those laws. But during this season, I noticed a shift to where even there was a trade. These markets are playing out better than the actual trending markets. It was NZD. It was the NZD show. It was one of these fucking pairs. This is NZD CAD. I didn't take this sell because of this, right? My rule, like my understanding of how the rules of the market usually are, right? When we're on good terms, these types of trades don't interest me. But understanding what state the market is in, and it's in a funky mood right now. You know, it's like the market's on its period right now, and it's just pissed off. It goes from happy to sad. It just keeps chopping and changing its mood, whether it wants to go up or down. And you can see how this trade played out. So understanding this helped me understand that, yeah, there is an actual shift in the market, and this trade that I wouldn't usually take, not following the trend, these are the types of trades that I'm going to be looking for in this market, because the conditions of this current market are not like the usual trending conditions we've seen throughout earlier months in the year, where it was crisp, man. We're catching high highs, we're going on dates, we're doing doggy style, it's chilling. And now there's cramps, there's fucking hot water balls, there's fucking crunchies and bounties. It's a whole shit show. But it's just understanding the shift in the market, and now I'm adapting to that shift. And I'm adapting, but I'm also very aware that it will shift back eventually. So just be cautious and learn to identify the shift in the market. All good shit that I'm learning and developing. But back to the markets. NZD CAD, it was next pair anyways. Yeah, NZD CAD, simply looking for a retest of this to take a buy position to the upside. Lovely resistance, right? Resistance. Support. Same thing that happened here. We're looking to happen here. Break, retest, push. Why I'm targeting this black line, you may ask? Well, when we come on the weekly, we are bearish overall, understanding that the only reason we are pulling back is to create a lower high. So you can also probably see again, I'm trading this morning star formation, backing with daily shift of structure, that higher time frame candlestick rejection with a lower time frame reversal pattern. That is the key to trading for me. It's just so crisp, because we're anticipating now that little retest, boop, come up to create the higher low for the weekly, if not shift, whatever it wants to fucking do. But this is my area that I'm going to be monitoring when I want to exit my position and have a minimum of a 1 to 2 at this area. And for that, we'll see the 4-hour shift bearish to then shift back bullish, give us those nice confirmation. But yeah, you can see EMA is coming into this zone. We have a psychological level just above it, and we have this previous resistance point where it created a previous lower high. And this is all within lower high, lower low. It's all within this range. So this is a high probability area for the market to potentially create a lower high, having such a significant amount of confluences to add. Look at that. Strong resistance, strong resistance, strong resistance, EMA, psychological level. I want to get out. I ain't trying to be in this shit no more. If it was a weekly trend and it was going to the upside, I'd look to hold this motherfucker all the way. But because it's not, you've got to understand that. And these aren't the types of trades that I'm looking to hold. Ideally, I want to take the trades that I can hold, because if I'm gonna be risking my money, then I want to risk my money for a much potential bigger reward than just these little eeny weeny bits, Next pair, NZD USD, rolling onto the back of last week. The markets didn't do nothing. I swear, they look so sexy. This still looks sexy for a potential continuation of that bearish trend. We never tapped into this structure level, which I love. So all I need to see is, again, just like we saw on NZD CAD, with weekly bullish engulfing, daily shift of structure, right? I just need to see a daily engulfing with a 4-hour shift of structure, which would confirm this left head, right shoulder, and that would give me the beautiful opportunity to have a retest with the EMA to then take my sell position from here. Stop loss down to here. Is it a minimum of a 1 to 2? It should be. Boom. I'm happy. You're happy. We're all happy. Beautiful resistance, support, you know. Then it's Euro USD, man. It's just so fucking clear, but so fucking ugly, right? We've literally just recreated the same pattern. Evening star, almost all the way back. Evening star, almost all the way back. Literally the same pattern, yeah? Now, there is a bit of a difference, because we still have this left head, right shoulder, but we have a bullish engulfing. So ideally, I want to see Monday just completely negate this bullish engulfing. I wanted to say, no, sir. Yeah, that ain't happening. Give me that bullish a bearish engulfing, which will give me the confirmation of a breakout, right? It'll give me that better breakout. Then I'll look to catch the retest when the EMA comes in, take my sell position, boom. That's ideally what we want to see. Retest of this nice support level we've created now. As you can see, this level, that level is what we're going to be looking for. Boom, boom. Yeah. Boom, boom, boom. And then sell to the downside. Lovely potential. So those are the markets that will follow my trading plan. Now, however, I've also added in pairs that do not follow my trading plan. Those pairs being a Euro GDP, right? These are all just based off of my intuition and understanding of the market and structure and price action. Are these systematic ways? No. This is purely just technicals. It's like 80% intuition. About 70% intuition, 30% technicals, right? Yeah, 65% intuition, 35% technicals, right? Because there are very clean technicals. Left head, right shoulder, big giant left head, right shoulder, break, retest, EMA, confirmation that we're rejecting this bitch. daily potential lower high, right? We're at this big resistance, we're respecting it, we've come down, sort of retest, like sort of shift of structure, retesting that previous structure. Looks like we could create that lower high to create a little wick and then a continuation engulfing down here. Then we come on the 4 hour and we see this beautiful pullback, we see a beautiful rejection. Now all we're waiting to see is a beautiful retest of this support level on the 1 hour, which happens to be, right? I'm gonna get rid of this bullshit. Which on the 1 hour happens to be a beautiful internal shift of structure, strong support, EMA coming into this zone. We're looking to take my position here, stop loss around there, take profit there. Like you can see it's literally like a 10 pip stop loss, 10 pip stop loss. Very much like a day trade. This market, just anticipating weekly to create another bearish candle. CHF, it just keeps pushing down. We're just going to keep watching it. But these are the higher risk trades, being that we have no previous price action. Ideally, we want to see this bitch happen. Beautiful pullback, retest, sell off. Beautiful pullback, retest, sell off. Will it happen? I don't know. But if what we anticipate does happen, which is this left head, right shoulder, break, retest, confirmation, if that happens, that would give us another bearish candle to create an evening star formation, creating a 4-hour shift of structure. So we have the daily rejection candlestick and the 4-hour, the lower time frame reversal pattern. Come back to retest this support, resistance, support, EMA, beautiful level on the 2-hour. Also the EMA is here, the 1-hour EMA is here. So many confluences to take this trade back down to these lows. That's what I'm looking for on that. CAD JPY, big ass evening star. We're sort of at this. It's like didn't actually shift structure bearish, so it's not the best from the weekly's perspective. But potentially a quick little pullback up to here. Stop, go, boom. Not my favorite market, to be honest. I'd rather these two. And even Euro UD, weekly engulfing, evening star formation, anticipating a weekly big pullback, continuation to the downside. The daily have a little lower high here, retest this previous structure, EMA, area of interest, 4-hour to give us that shift bullish, but it's giving us that shift bullish here, then for a little shift back bearish and a bit more confirmation, maybe like a 2-hour head and shoulders. But overall, the best degenerate trades we're going to look for are Euro GDP and NZD CHF, simply because they have the lower time frame probabilities, right? So those are all the markets. These we don't even need to take these. We already have such beautiful markets up here. With their potential alone, that's all we need. That's all we need, baby. This is just an experiment down here, right? Just a quick experiment. See if I might add in capital that I trade. And I will trade these types of degenerate trades that do not follow my trading plan. I'll trade a lower sized capital on those. And then obviously I'll trade my big boy capital on my actual trading plan. So it's a bit more like fun, because it gets boring staring at the markets for 5 weeks and doing nothing. Like, don't get me wrong, I can do it, proven I can do it. But again, it's keeping that engagement, keeping your mind active in the markets, monitoring. And that's something that I think I should implement just to, keep me going. When a footballer goes off season, he doesn't stop kicking a ball completely. You know what I'm saying? He still has a football at home, still has a goal. Easy peasy, easy peasy.